Hello, good morning. It's Monday the 30th. I'm FX Blue and this is the market brief. So, the UK economy has got some pretty dark clouds looming over the next few months. Unless there's a surprising change to performance, the service sector will likely contract in June. Services make up 80% of UK GDP, so if the service sector is in decline, the UK economy will be in decline and heading towards a recession. So the Bank of England has a tricky old decision ahead of it. It's hard to imagine any central bank that would tighten rates when the economy is contracting. That would just accelerate the route to recession. But UK inflation is still riding high and rising, so we may very well see another 25 basis point rate hike at the next meeting. The government, meanwhile, looks pretty comfortable sitting on its hands, other than the package of emergency measures introduced last week. But that was more of a distraction away from Sue Gray's report into the Downing Street lockdown parties. Stable economic growth and controlled inflation is the remit of the Bank of England, right? Let the finger pointing commence. Meanwhile, in the market, the service sector data saw sterling fall. We touched 124.70 against the dollar, but we opened the new week from around 126.50 against the dollar and 117.60 against the euro. Now, over in the US, a recession is looking more likely over there too. Data suggests it may only be a mild recession, so nothing to worry about as the Fed can handle that easily enough. And the reality is, recession itself is not something to be too worried about. That sine wave of boom and bust, or growth and contraction at least, is a staple economic reality. Yes, of course, the red tops will sensationalise it for all they're worth, and yes, there will be some unavoidable hardship, but it won't be anything like 2008, when hundreds of thousands of people lost their jobs and their homes in the aftermath of the credit crunch. The energy prices are an external factor which still carries a little risk, but while data for new home sales suggests early signs of slowing in the economy, inflation actually fell a bit in April, suggesting the Fed policy action is already driving results. In the market, the dollar index reached a low of 101.45. That suggests that the recent correction may be nearing the end. That's a 50% retracement to the recent highs over that 105 mark. So it should attract some buying interests. Might not be this week though. Old Queenie's Platinum Jubilee in the UK means the market may be a little thin. We're all off on holiday on Thursday and Friday this week. So non-farm payrolls, well, that may see a little volatility on Friday, but fans of the sweepstake will be left high and dry this month. Doing all that on my day off? Hard pass, thank you very much. Anyway, forecasts are only for about 200,000 new jobs this time anyway. Hardly worth getting out of bed for, is it?
If you do not have a clue, then just tweet through and ask FX Blue.